This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Friday, February 6th, and this is the AgYield War Room. Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. We'll be sure to get to it during the show. Overnight markets here at March corn down 2 1/4 at 432 3/4. March soybeans were up 5 3/4 at 11.18, and March Chicago wheat was down 1/4 at 5.35. No export sales announcements here this morning. We are now through 4 out of the 19 settlements for the spring crop insurance discovery price. Corn's currently averaging $4.57. That's up a penny from yesterday. On the soybean side, $10.85 is where we currently sit. That is up another 4 cents here today. Last 2 sessions, that price has increased by 8 cents. So certainly getting better there on the soybean side. Bumping into some interesting tech levels. We'll get to that in a second here. First, Stats Canada was out this morning. On the wheat side, 27.5 million tons. They were looking for a number closer to 26.5. That's up 5.9% year over year. Other interesting stats there, 15.6 million tons on the canola side. It was just right pretty much in line with the estimates, but up 18% year over year. So increased canola production. Corn was down 3.3% year over year. Soybeans actually down pretty significantly, 26.6% year over year. They don't grow very many of those, 3.2 million tons. And on the oats side, 2.7 million tons came in line with the estimates, but was up 9.8% from year ago levels. So as I mentioned, Dustin, it'll be an interesting close here today. Certainly in the front of the markets, you've got March corn, 438, still a big key technical area on the beans side. Certainly turned up the interest after President Trump's True Social post here earlier this week. So I guess give us some thoughts as we wrap the week, and then we'll throw around the room.
Yeah, thanks, Dan. Yeah, beans are on a tear, right? I think yesterday, 2-day was, over 50-cent move here now. Markets still digesting it, right? Because there's a lot of people asking, has there been confirmation that China agreed to this? I don't know if the market's even going to get that. I think it's going to be, we're going to start seeing these sales come through. But, it is, the spreads are kind of telling the story, spread inversion on beans. This doesn't necessarily erase the number of beans available in the world, right? It's just, it shifts the U.S. carry out to be lower. And we still will have to compete with Brazil probably in the long run on against this large crop that we're expecting from them. So that's just something to keep in mind. I mean, it is helpful that we will have a lower carry out, making just because our domestic crush number is off the chart. Right? We're running 7.5% above last year's record so far. If we just trend it out at a 5% increase for the rest of the months, and then just take the Chinese extra business. Like I said yesterday, we could get down to 200 million bushel carry out at the current projection. But if we look at like corn, I think corn could still potentially kind of be a poison pill because of the supply excess. So I have a chart here of beans divided by corn. So this is the bean corn ratio. And we're up to 2.58 to 1 is what this is showing. So you see that sharp spike the last couple of days. That's post-announcement with Trump. So beans have gained most of this move. We're about to, we very easily could test that high that we had back in November. Key difference here is we didn't know South American weather back then, right? Now we do. I would not be surprised myself to see that go to a new ratio high, especially in the old crop. But it may not be from what we think. It may be that we're running into that kind of that worst pricing period that we can get to in corn, where everyone's kind of got to deal with the March contract, the basis only contracts. So this ratio can go to new highs just from corn falling rather than beans rising. I don't know what that will be, but I think that's just kind of my 2 cents is that if you're thinking about marketing old crop, I'd probably be quicker to sell corn than beans is kind of the outcome of that chart.
Oh, very good. Ben, what's on your mind here this morning as we wrap up the week?
Following what happened with the Trump tweet, you probably look around and think, okay, for corn, if you're talking with a good friend of the industry, actually brought up a great point. There's probably people looking at this going, not sure how short we want to be any ags with what happened in beans and with one tweet. And I think the question is there any appetite for them to get long corn or wheat? And I just don't see it right now. I think it takes a safrinha issue and or some aggressive China unknown corn purchases. So, we start with the Goldman roll, and would expect to see March, May widen a little bit, kind of the first test before we get to delivery. And just corn hit right in sort of a sweet spot, 35, 36-ish, right in there. On the chart, looking at that prior to the bean change, that was kind of a place where you probably should reward the corn market if you're if that's what you need to do. And now we just see with the roll, beans up against a little bit of resistance here. I think that there's definitely an appetite there for managed money to get long. Doesn't mean there's not going to be a 15 to 30 cent, 40 cent pullback at some point. And I think what Dustin said is right. We need to see some of those sales materialize. We need to see it and have confidence that it's going to be shipped. So I don't know. I kind of expect a quiet day today.
Jace, from a trading perspective, interested to get your opinion, seeing the money flow into the front of these markets just in the last, 3-4 sessions, and what, just from a pure momentum type of philosophy, kind of what your thoughts are.
Yeah, thanks, Dan. From a trader perspective, right? It's how much beans can you buy in a short amount of time and run in shorts, right? I mean, when you have that kind of announcement, and we've had a big break in beans, order flow is just quick, right? And it's max pain, run in shorts, put it at new prices we haven't seen, hold them there for a while, and get a lot of volume trading. So, bust through all the moving averages, so it's a squeeze somewhat, right? I mean, this is front running China purchases from that tweet. We did it back in November. I think Dustin made a good point. That was way before we knew South American weather. So it's a much bigger question mark of what this means. And what kind of started that, put a top in it in November and started the break was when people started realizing the huge premium between the U.S. and South America. And then you start to think about that and you go, well, how long can this last? And it didn't, right? And we had that big break, and we're having that same issue again, right? Where we've now rallied 60 cents, and we're $1.50 premium to South America when they are, going to have at least an average crop, if not a record crop, and what are they, 15% harvested in Brazil?
Roughly.
Roughly. So
yeah.
we're still 50 cents off of the high of what we made in November. I would severely doubt that we go test that again. I mean, we'll see. But this feels like, bean rally 2.0, so just be really careful. Even if they come in and they purchase that 8 million metric tons, supposedly a lot of people are speculating before Trump and Xi meet in April. Mm-hmm. That's what it seems like. Obviously the front months, May in particular seems to seem the most active contract. What does that mean, right? It's like, okay, once they get that done and done purchasing it, now what? Now you have this huge premium, even though we're super tight. Markets figure out a way, right? I mean, if we have this premium, we might import beans into this country so that we can crush them, right? I mean, the market will correct itself, in my opinion. Yeah, go ahead, Dustin.
Oh, I just want to add to that because I think it's I think you're absolutely right on that. Like, be careful because we really do have to compete with them the whole time. The one thing I would put in as a caveat that makes me a little bit more comfortable with the bean rally is the real. Right. So like, there's actually, I have a chart, Jack. So this is bean price in black, the reals in blue. You know, if we were to extend this way back, you know, the last 2.5 years, you can see the connection clearly. They're still going to be receiving, even though it's a record crop, a lower price than they otherwise would have 6 months ago at our current prices. Because
they might not be willing sellers.
I think they might not be. I think this is like they've had the luxury of multiple years of bear markets for the real. This is the first time we had a pretty sizable rally. I don't think I wouldn't discount that they still are going to price against real instead of dollar, and that it may be just a little bit slower than we think.
Dustin, not to interrupt you. What's their holding capacity though? I mean, they're feeling the credit crunch as we are, right? Their growers are still pinched for cash as well, right? And that's their piggy bank.
100%. I'm not like, it's just that, you know, no one marks their stuff down to zero, right? It still has to flow at a certain pace. And let's just say like there's a non-free market trade deal with China. I think Arlen Suderman said this the other day on Twitter, like we may import beans if we really ship this many beans because we have a certain crush capacity we're going to hit. And so ultimately we price ourselves against the cost of importing US beans or Brazilian beans into the US, which is definitely a higher price than it would have been before because of the transportation cost. And that may not be the case for November. And that I think the market's properly displaying that through an inverted spread. And China may not buy from us either. Like, you know, it's hard to know what's going to happen, but I do look at that real and think we've been trading beans under the cost of production for a while, and maybe that we're finally catching up to the currency moves. That I'm not necessarily worried about it going to $9 right now. I mean, it could, but I think that we have a much better base because of the currency move.
One of our listeners, watchers here, at what price point, in your opinion, is beans will impact crush margins and slow down usage? Dustin, any idea there?
Yeah. Well, crush margins, I think are certainly an issue. I mean, we're still at $1.67 though, so the crush margins have largely kept up in the nearby with this move. So, you know, I think crush would have to really fall down to sub 120 and stay there before things slow down at all. But you know, once you build this capacity, we're not seeing a 7% increase because crush margins are good. Right? We've had record crush margins last couple of years. It takes many years to get the crush capacity up. We're seeing crush capacity up because of the promise of renewable diesel and the need to fulfill, you know, like there was an increased demand that we needed to fill. I don't think once you build those facilities that's going to meaningfully slow things, even if crush margins turn negative for the short run. Like I would bet heavily that we're going to hit a 5% above last year's record for the rest of the months out on average.
We're doing it. I mean, we continue to set records every single month. So
yeah. These facilities are built. That's the great part about a lot of this domestic demand is coming on board.
Well, and that's why we need this policy. I mean, Washington has got to get their head out of there. You know what? Because you're crushing. You've got the infrastructure to go for it, and it could be huge for us. You know.
Yeah.
But the kick in the can stuff they gotta figure it out.
Yep.
You know, I'm sick of 60-day government input or, you know, public input. It's just, anyway, end soapbox. So real quick here, Ryland, let's put a bow on the cattle, which I'm sure everybody would be pleased about. It was never really recovered yesterday after that wild open that we saw, and overall pretty mixed in the hogs. So why don't you wrap us up here for the week?
Yeah, it was a wild ride yesterday. I mean, obviously the vote by the JBS labor union to essentially just say it's okay to strike just sent the market into a complete spiral. So, I mean, it was just one of those things that really nobody saw coming, and you got a really violent, strong reaction. I mean, as we've been saying, this market is unbelievably sensitive to bad headlines because of where we're at and how everybody's mind is going to change the second we have a really bad couple weeks, so we are kind of coming into a time frame where we are a little bit more vulnerable. But yeah, yesterday we ended up closing below the 20-day moving average. You took out a lot of kind of key support levels, kind of creeping up on that 40-day moving average. So we'll see if there's any more follow through to this. I mean, obviously there was no timeline on this strike, or if it's even going to happen, or if there's negotiations that are just going to end it. But to save the day yesterday, Packers jumped bids up to 240. So steady bid in cash. Obviously, that's going to get the market pretty excited this morning. You saw 378 trade on the Dressed in Nebraska. So overall, it just kind of seems like, there's still this kind of overall sense that cash markets are going to struggle to stay down for very long, in this environment, even though we are kind of in that kind of weaker seasonal beef demand time frame. Typically in the middle of the month, we see things start to back up. We see cash markets start to drop. I was just kind of surprised that Packers didn't throw out lowball bids to get anything because of the weakness on the board. So it just kind of feels like everybody's expecting the rebound today, everything to hold up, and then seeing 240 plus trade when all said and done this week. So back, kind of back to square one. So we'll see how we finish, though. I mean, obviously there's going to be some shakiness here, in the cattle and in the hog sector as well. I mean, hogs had a mixed finish yesterday. We held up really well. We dropped hard, kind of followed the cattle, and then kind of rallied back. The cash news was just kind of mixed. You had carcass regain a little bit of strength. Bellies were up 638, kind of leading that charge. So carcass up $2.27. But cash was a little bit lower here. I mean, obviously, I think just the meats are going to stay really on the firmer side in general for the time being. But in the next couple weeks, things could shift a little bit seasonally, like we've seen before. So I think there's just some vulnerability here. Obviously, we got the roll going on. It's going to be a lot of money, I think, moving to the back end of the market. But overall, just usually that just creates a pretty heavy amount of volatility. Like I said, I think cash holds up this week to finish out pretty good here in both places.
Very good. And we just saw a really strong open, up $6 in the feeders and almost $4 there in the fat. So good strong open in the meats here this morning. Guys, we made it another week in the books as far as War Room is concerned. Brian, Fun Fact Friday, take us out.
All right, thanks, and happy Friday, everybody, and happy Super Bowl weekend. I know I've done the Super Bowl in the past, but the numbers keep getting crazier and crazier, so I thought I'd go at it again. A 30-second commercial last year was $7 million. This year it's between $8 to $10 million. To put that in perspective, that's $230,000 per second. It's insane. Americans are expected to spend a record $20.2 billion on the Super Bowl this year with food and decor and the whole thing, but mostly with that's for sure. Not even getting close, but mostly with chicken wings and beer. Chicken wings are estimated to have 1.48 billion consumed. That's up 10 million from last year, and 50 million cases of beer consumed. To put that in perspective, that's enough to fill 5 Rose Bowl stadiums. So think about that. Jason, you'll be excited to know this. Cardi B is spending around $1.2 million to bring her entourage to a suite in support of Stefan Diggs. Not sure I would be, that's the guy I would be supporting, but what it is. Americans will also wager on the Super Bowl this year about $1.76 billion. So to put on some of these crazy bets, here are a few that I came across, which is kind of crazy. But the Seahawks are 0-2 in Super Bowls where wearing their Navy jerseys. Ooh. They're wearing their Navy jerseys this year. While New England is 4-2 wearing white jerseys. They're wearing white, but are only 2-4 in even number Super Bowls. So flip a coin, I'm assuming here, right? Dan's favorite quarterback, Sam Darnold, will be the first first USC quarterback to start a Super Bowl.
Great.
And he's 0-4 lifetime against New England.
He's going to be 0-5.
Rabel will be the first coach player for the same team if he wins the Super Bowl this year ever to win as a player and a coach for New England.
That's a cool one.
Yeah, that is kind of neat. And then lastly, Dan's favorite artist, Bad Bunny, will be doing the halftime show.
Stop.
Odds on this one of showing a nipple are minus 500. So that's 83% chance of that happening. So I think we have a little look into the Sunday night halftime show here.
Rather.
I did see a nipple, so yeah, that's one to bet on.
There's a nip in there.
All right, for those that are watching, you can submit your Fun Fact Friday resumes to info@AgYield.com.
Oh my too God. Good. Have a great weekend, everybody.
You know, it's minus 500. I'll pay $1,000 not to watch that. How about that? Right. Anyway, this could get bad. We're just gonna wrap. Very good, Brian. That was awesome. One thing to note in the comment section, we've got the link for the War Room Report. Be sure to check that out. Premium content. We'll be discussing crop insurance. We've already put out our first video based on what we're thinking here for starting the season with crop insurance. That we're going to build upon that here as we get closer to that March 15th deadline to make the decision. So be sure to check that out. Also, it's got really good information, kind of a deeper dive into the things we talk about here on the War Room. So again, check that out, War Room Report. And also 10% of the subscription fees will go to support the AgYield NextGen Foundation, supporting the next generation of leaders in agriculture through our national scholarship competition. So really cool initiative there. We appreciate everybody tuning in on a daily basis. Throw us a like and subscribe. We're doing it every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great weekend. Enjoy the Super Bowl, and we'll talk to you again on Monday.
The War Room is presented by AgYield, a risk management partner of American grain farmers for over 50 years. Looking for more in-depth analysis? Check out the War Room Report. Our team's knowledge and expertise delivered straight to your inbox every weekday. Each report delivers key market-moving headlines, critical weather updates, USDA report breakdowns, and exclusive video content. All for $50 a month. And most importantly, 10% of every subscription will go directly to support the AgYield NextGen Foundation, a nonprofit investing in agricultural education and the future of farming. To sign up for the War Room Report, check out the link in the description or learn more at AgYield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.